Let us do a quick revision of this chapter, leverages. There are two types of risk in a business environment. One is business risk, which is directly related to the operations, whether we will get the operating income or not, whether our EBIT will be enough to net off the expenses or not. Second is the financial risk. This is the additional risk due to the debt, that is the interest which is paid on or loan borrowed. All this causes the additional financial risk. Now, leverages. What is leverage? It is basically the impact of one thing over the another. How to find out this leverage? If you want to find out how is x is changing because of y, then it is changing y divided by y, the whole divided by changing x divided by x. This is also called as leverage of y with the x. Now there are three types of leverages. One is operating leverage, financial leverage, and combined leverage. Operating leverage is directly related to the business risk, and it is the leverage of EBIT with sales. How is EBIT changing because of changing sales? Next is financial leverage. How is EPS changing because of EBIT? This financial leverage is again related to the financial risk. Third is combined leverage, which is combination of both of these. So how is your EPS affected by changes in sales? Next is total chart. It's a basic formula to calculate all the leverages, and the entire chapter is almost covered in this chart. Sales minus variable cost is equal to contribution. Contribution minus fixed cost will be your operating profit or EBIT. Minus your interest will be your EBT. Minus your tax will be your profit after tax. And if you have preference shareholders, then you subtract preference dividend so that you get net earnings available for equity shareholders divided by number of equity shares will be your earnings per share. Now, coming to operating leverage, that is basically how is your EBIT changing when sales is changing. By sales, what do we mean here? Sales is nothing but quantity into selling price. Selling price is an external factor, so we only take care of quantity changes. Now, degree of operating leverage is calculated by percentage change in EBIT divided by percentage change in sales. Now, what is EBIT? Quantity into sales minus variable cost minus fixed cost. And sales is nothing but the quantity here. Now, simplifying this formula, we get contribution divided by EBIT as our DOL. Now, what is break-even analysis? Break-even analysis is analyzing which point. By point, what do we mean is quantity. At which quantity we have absolutely no profit or no loss. That is the point at which your total cost is equal to your total revenue. So, how to calculate this BEP in units? Fixed cost divided by contribution, that is nothing but sales minus variable cost. Now, whenever you have a higher fixed cost, your BEP will also be high. Whenever you have low fixed cost, your BEP will also be low. Now, coming to margin of safety. Margin of safety is nothing but the buffer which we have before we incur losses. If your break even point is equal to 10,000 units and you're already selling at 13,000 units, then that 3,000 units is your buffer. It's that margin of safety. And calculating margin of safety in the percentage will give you this formula. Margin of safety is equal to sales minus BEP sales divided by sales into 100 to calculate the percentage. And this is related to the safety, and degree of operating list is directly related to the risk. Therefore, this is inversely proportional. That is, DOL is equal to 1 by MOS. Coming to the next leverage, which is financial leverage. Financial leverage is nothing but EBIT divided by EBT. Only the interest will be changing here, and to calculate degree of financial leverage, it is percentage change of EPS divided by percentage change in EBIT. Now, this financial leverage also has two terms. One is trading on equity and the other is double-edged sword. Now we'll understand why it is called as trading on equity. When you use debt as a tool to increase your earnings, then it is called as trading on equity. We saw in an example in the detailed version that how can we use debt more to increase the return on investment on equity. When your earnings is more than your cost of debt, then it is favorable FL. Similarly, when your earnings is less than your cost of debt, then it is unfavorable. That is why it is also called as double-edged sword. It can increase the return on investment on equity also. It can also decrease your return on equity depending on your earnings. That's why when your ROA is more than the cost of debt, then your surplus will go to equity shareholders. But when your ROI is less than the cost of debt, then the deficit should also be borne by the equity shareholders. That is why it is called as the double-edged sword. Now, what is financial BEP? Financial BEP is at the point at which your EPS is zero. Now, plain BEP is a point at which where your EBIT is zero. So basically, in this case, your total cost will be your total revenue. Here, your total cost will include your interest also. Here, it will not include interest. Now, coming to the combined leverage. Combined leverage is nothing but the multiplication of both. Therefore, the formulas will also remain the same. OL is equal to contribution by EBIT and FL is equal to EBIT by EBT. Simplifying this formula, we get contribution by EBT. Now, what is degree of combined leverage? It's again simplifying the formula, percentage change in EPS divided by percentage change in sales. Now, here we have an analysis. When both are low, your total risk is low. When both are high, then it is very risky. Then when you have operating leverage high and your financial leverage is low, it is not a good combination because your business is already very risky. Your EVIT is very unstable. Whereas in the next case, when your financial leverage is high and your operating leverage is low, it means your EVIT is stable and you have the benefit of trading on equity also. That is why it is the best combination. That's all about this chapter. Please refer to the detailed video if you need any explanation on anything.